This week, Europe's second-largest automaker, Peugeot, staged the worldwide launch of its new 408 model in Beijing, hoping for big sales in the world's largest car market. And China's Zhejiang Geely is hot to buy the Swedish automaker Volvo, which its owner Ford has been trying to offload for some time. But things are not what they seem. As stock markets open for February, Asian investors are worried about the impact monetary tightening in China may have on a fragile, recovering world economy.
We're seeing certainly conflicting reports coming out of China about lending. The bank is concerned that if they continue lending apace, that it's going to contribute to the housing bubble, contribute to the real estate bubble, and maybe leave China ultimately in a cycle where they need to continue this massive expenditure just to keep themselves on hold. At the same time, the Chinese are also still looking at the idea that they can't yet pull back on their stimulus and on their loans because the economy is not really ready to run itself. The domestic consumption just isn't there yet.
Welcome to Stratfor's Agenda with Colin Chapman and Roger Baker. The eastern city of Shanghai hopes to attract 70 million people to this year's World Expo, but long before that, the agenda for those economies dependent on China's ongoing success is how sustainable is it? Under firm instructions from Beijing, banks are curbing lending. And leading figures like Yu Yongdong, the president of the China Society of World Economics, is openly criticizing the government, saying monetary policy is too loose, there could be an increase in bad loans, and that deep-rooted structural problems must be tackled.
A lot of the money is going into infrastructure, and there's already been signs that they may start to pull back on some of those infrastructure projects. The projects that they chose were there because they were already on the books, they had the ability to employ a lot of people very quickly, and in the long run, they could build out a way for the country to really improve some of the rural areas. The problem is that by spending the money on these large-scale projects, you have to keep giving them lending year after year after year because these are very, very long-term projects. And the banks and the government are not sure they really want to do that. Now, if you cut off the projects, you've got it half done, and you're going to have the employment problem that there are not the jobs yet to pick up these people.
Roger Baker also questions whether cuts in lending will stop the property bubble.
We expect the bank lending cuts, at least in the short term, to hit across the board. But the local governments may have a leg up in this. They're continuing to encourage lending and encourage borrowing, particularly for things like construction. A lot of the local governments get up to 40% of their revenues from basically changing the land use. And by being able to convert new land to new construction, the construction companies, meanwhile, who are working with these governments, are relying on the loans to be able to build the new construction and then relying on the new construction to be able to use as collateral to get new loans to build new construction. And it's become a cycle that they become addicted to, though.
With exports to the United States and Europe faltering, China is entering into talks on a triple free trade agreement with Japan and South Korea. Their economies combined amount to $10 trillion or more.
Stratfor has been saying for a while that the Chinese growth figures are probably unreliable, that they've been, in many cases, vastly inflated, and at the same time that they're unsustainable. You can't continue to grow at these double-digit rates for eternity. And with the Chinese still fairly dependent upon their exports and the export markets being down, the Chinese economy is not going to maintain this level of growth. That's going to impact those who are suppliers to China, people who are selling the raw materials, who are selling the commodities. It's also going to impact those who are investing in China and those who are counting on China to be a new consumer market. And that may cause some problems, particularly with some of the big economies in the region like South Korea and Japan. South Korea and Japan and China are working on a trilateral free trade agreement. The South Koreans and the Japanese have looked at the slowdown in their export markets in Europe and in the United States. They've looked at China as a potential place to be able to start picking up those exports. And the Chinese gave signals that they may be interested in that, but we're not sure that that's going to be sustainable by the Chinese.
I'm Marla Dial with a look at events in the coming week. Bulgarian Prime Minister Boyko Borisov was meeting with Turkish leaders over the weekend, while UN Secretary General Ban Ki-moon was in Cyprus, attempting to lead the way toward reunification talks, and an African Union summit got underway in Ethiopia. On Monday, U.S. and Russian leaders resumed nuclear disarmament talks in Geneva, and Iran will be making overtures to shore up relations with Azerbaijan. An opposition rally is being planned in Bangkok on Tuesday at the Air Force headquarters, and there's more action ahead on Wednesday as Romanian officials take up legislation that's needed to unlock aid from the International Monetary Fund, and Ukraine's leadership discusses security issues surrounding the presidential runoff on February 7th. Meanwhile, Turkey and Iran will be talking about economics, and the International Criminal Court issues an important ruling for Sudan. The European Central Bank session on Thursday will end with an announcement on interest rates, and defense chiefs for NATO states will be discussing Afghanistan and financial issues at an unofficial summit in Istanbul. Finally, there's the Munich International Conference on Security on Friday, where the Ukrainian and Russian foreign ministers are expected to meet.